Hello and welcome to my next war and market review. Well, today was a mixed day for the market with the large cap index down a little under 1%, but the mid cap, the small cap, and the micro caps were all up in varying degrees. I think micro cap was up about 1.2%. What are the other facts? Again, the advance decline ratio was in favor of advances, though much lesser than the last few days. Last few days, if you remember, it was 2:1. Today, it's about 1,700 is to 1,200, which is about 58.42%. So, continues to be that the broader market gets more participation. What about the FII and the DII flow numbers? Well, both were sellers today. So indicates that while FIs continue their selling around 2,000 crores today, DIs who for a short yesterday were positive have turned back to a negative ahead of the earnings season today with about 1,000 crores of net sales. So both institutional players were net sellers, but the broader market is up with a strong advance decline ratio, indicates that again it was a retail and HNI driven buying day. So the situation on the geopolitical front was not very comfortable with though the ceasefire has got extended, the talks apparently have failed. There have been no set of talks, and Iran has fired on a ship or a tanker. So oil has again spiked as I speak to past $100. So clearly, that's not a good sign from tomorrow's market. But let's first analyze today's market in a little further detail. What actually happened? Why is it that the large caps were negative and the broader market is positive? Well, one single answer for that is the bad results which have come from HCL Tech and one more company, I think Tata Elxsi, right? So that is what I want to point out, and I think we spoke about this yesterday too, that some of the bellwether stocks are determining sectoral views very strongly. So the other day when the HDFC Bank, ICICI Bank results came, the bank index rallied, right? So like that, when yesterday I think there was a good Nestle result, the FMCG rallied. So today there was a bad HCL Tech result and the IT sector cracked 4%. So very strong move. It was the one sector which moved very strongly in a negative way, because otherwise, if you see today, the top performer was the energy, the defense, all up around 1%, 1.5% to so forth. So not a very strong move, but energy clearly because of the oil spike. Defense again shows the retail play of the interest during a war scenario with defense stocks, and FMCG and realty again are reflecting a continuance from yesterday. So the negative shock today was the IT. And as a result, FIIs not only in the cash market have sold. If you look at the F&O markets to just get a signal of what FIIs are thinking, well, first of all, the volatility index was up at 18.7, I think today, up 4%. But both the put call and the long short ratio are indicating that the long short ratio I think moved from 32.68 yesterday to 28.72 today. So shorts have increased and the longs have come down, right? Second is the put call ratio also is at 0.88 or 0.87 when I saw it. So which means that it is a bearish trend. So clearly it's not just in the cash market they're selling, they also have a negative sentiment, driven again by the tech results to a large extent. And that has been combined with the fact that today the rupee also weakened. It ended at about 93.76, but the forward premium also expanded. And so 1 year forward is trading at 97 now. So all in all, that's also not good from an FIS marketing to market their portfolios. So what about the tomorrow's scenario? Well, again, I would say that with this kind of a short position built up, it doesn't give a good signal. The GIFT Nifty is currently trading down. The one thing which can counter that is I think there's one more biggie's result Infosys expected. And if Infosys delivers a good result, you could see a sharp bounce back because a lot of these shorts may get covered. But if Infosys also supports a kind of weak earnings come guidance kind of story, and the pressure could be there on the market for tomorrow. So apart from this, the geopolitical front continues to be a nice melodrama which you have to watch from the sidelines as tweets and counter tweets and information flow. Still hard to trust and realize that what is the reality behind it, because Iran is now saying that America is just buying time to build up forces for a larger attack. So God forbid that happens, because that could send oil spiking upwards. So we have to continue to keep waiting and watching the geopolitical scenario. And like I said, I'm a bit worried about this strong retail buying over the last few days. Like I said yesterday, I'm repeating it today. If the war actually ends in the next few days and the markets then bounce back, supported by good earnings season, all this retail buying will make a lot of sense. They'll be the happiest. But if there's bad news on either of the fronts, like a biggie in the IT tech sector today or tomorrow, a biggie in some sector hits the earnings back, or the war situation slightly worsens, all these people would suddenly have, seeing red on their numbers. So I would suggest that rather than going and do the lumpy buying, which appears to be happening from retail and HNIs, a staggered small approach, which is what I've been telling from day one of the war, should continue to be your primary long-term investors' goal today. And like I said, do not pick sectors. If that day based on TCS you had picked IT and today based on HCL it's selling, picking sectors is hazardous in this scenario. Stay diversified. That's the most important thing to do. And like I said, do not panic and sell. This is not at all a moment to sell. So keep those golden rules from my perspective in your mind, and I'll meet you at the next update. Thank you. Good day.